Guys, it's Friday, and that means one thing, the Friday wrap. All right, this is week 3 of a 3-part series. This is the final week about strategies to help reduce the tax that you're going to pay this year. Very quick recap. 2 weeks ago, we spoke about the instant asset write-off. So if you're a business and you meet the thresholds, you can purchase assets up to $150,000 and claim the full amount as a deduction this year. You don't have to depreciate it. You claim the full amount as a deduction. Some good news on that one. This week, the date at which that was going to finish has been extended from the 30th of June until the 31st of December. So if you don't have yourself in the position to purchase the asset this year and claim the deduction this year, you've got another 6 months to be able to do so. Happy days. Last week, we talked about super. The advantage from a tax point of view is getting in up to $25,000 and claiming a tax deduction for that contribution can save you a significant amount of tax and can help you build a significant amount of wealth as well if you do that regularly, over time. That's a great one for businesses and employees. This week, what else? What other opportunities, what other strategies are there that can, be implemented this side of 30 June and help you save some tax? Well, I don't want to focus on just business and I don't want to focus on just individuals. So I've got a couple of ideas for each and we shall get into them. All right, year-end tax strategies. What else? So if you are in business, let me give you a very quick accounting lesson. Cash and accruals. What's the difference between cash and accruals? If you run your business on a cash basis, then you earn income as it's received, and you can claim an expense as a tax deduction as it's paid. So literally as cash hits your bank and as cash leaves your bank. That's when you earn the income. That's when you can claim the expense. And that's important because I want to talk about a couple of strategies that are available to you, and they're different depending on if you're on a cash or an accrual basis. So let's have a look at the income. What is available from an income point of view? Well, let's say you have provided a service and you are about to invoice people. If you run on a cash basis, you can invoice them now. You don't get paid that money. Sorry, you don't claim that money as income until you get paid. So maybe wait until the end of the year, the end of the month, the financial year, until you issue those invoices, because chances are the people aren't going to pay you, that next minute, and you'll have had the money in your bank account. So if you're in a position where you're making a profit and you're going to have to pay tax, consider waiting to issue the invoices so you don't receive it until next month, next financial year. If you are on an accruals basis, then if you issue an invoice, then you're going to have to generate, the income as being received based on the issuing of the invoice. So maybe complete the work, maybe issue the invoice next financial year so that you don't have to worry about, having that income being reported in your return this financial year. What about expenses? Well, it's the same thing, but opposite. So from a cash point of view, again, if you're in a position where you're making a profit and you want to, pay less tax this year, are there any items you need to purchase? We talked about the instant asset write-off, but maybe it's not assets. Maybe it's stationery. Maybe it's, maybe it is office furniture, computer, that sort of thing. I'm going to buy a computer for myself. The one I've currently got is getting old, getting slow. I'm going to buy a new computer. I'm going to do it this side of the financial year. So if you're on a cash basis, then you want to make that purchase before 30th of June. If you're on an accruals basis, you want to receive the invoice this side of 30th of June. So a couple of little ideas there. Hold off on giving the invoice till 30 June or after 30 June if you're on an accruals basis. Hold off on being paid your money you're owed until, next financial year if you're on a cash basis. If you're on a cash basis for expenses, pay the money now. Buy the item now. You get the deduction now. If you're on an accruals basis, you need to receive the invoice now. You don't have to pay it now, only have to receive the invoice. So a couple of ideas there for business people. What about if you're an individual? Well, the deductions that you claim as an individual, you can claim a tax deduction for any expense incurred in earning your assessable income. So for example, if I was to do an accounting course and I'm an accountant and I am an employee, I can claim that expense of that course as a deduction because it's helping me to further my knowledge, advance my career, earn extra money. Is directly related to the income that I earn. So if there are expenses, if there are items you need to purchase, again, like the computer, if you use your own computer for work, if you're at home and you're researching and you're doing work from home and you need your own computer, your computer is, an asset, it's a part of what you need for your job, then, you could buy a computer. So things like that, if there's an expense that you need to make, and the expense is required for your earning income capacity, then you can claim that expense as a tax deduction. So if there's anything like that, maybe get it this side of the financial year, you're going to get a bit of a refund when you do your tax. What about gains and losses? If you have shares and you've bought shares and sold shares, and you might be in a position where you've made a gain during the year, do you have any shares that are in a loss position that you might not want in your portfolio? You're considering, reducing that stock, whatever the issue is. If you've got a capital gain from purchases and, sales during the year, and you're sitting in a position where when you do your tax return, you are going to have made capital gains. If you've got shares that are less than what you bought them for and you could sell them for a loss, then the potential is you could potentially sell those shares, potential. You could sell those shares and somehow offset, a portion or all of that gain. So a couple of things to think about. There's a couple of ideas for you. I could go on and on and on. I don't want to bore you with, things like this for tax reasons. Next week, I have got a beauty. I'm really excited about this. We're going to go away from these, tax deduction processes. I wanted to give you a few weeks prior to the end of the year to do that. We've had a few of those. If you have any questions for yourself, Jace, if I buy this, what will that mean? Is it deductible? Am I going to get a refund? How's it work? Give me a call. It's the 12th of June. We've got a few weeks left of this financial year. Let's get it done now. All right, guys. That's it. That's me for the week. Happy Friday.